Hey, good afternoon, everyone. I must really apologize for the delay. Um, you're very welcome to this session. Uh, we'll jump right into it. So our teacher, Anita, who's a very great person, financial analyst in the market. She's currently unavailable, so I have been appointed, right, to handle this session. So yes, it's not going to be a long session. I also want to state that this is not an advanced class. Um, this is not an advanced class. This class is meant for people who are still trying to navigate the basics of trading. You understand? So this class is for those who are trying to navigate the basics of trading, okay? So that maybe somehow you got this link and you're an advanced trader. What we'll just be talking about, is for basic traders, okay? I'm sure that no distant time, I think this week or next week, we'll still be having something for our advanced traders, okay? So that you don't rush this new guy. So I'll be going at the pace of a newbie. Okay. So we have two topics we want to talk about. Pips and lot sizes. Navigating pips and lot sizes. What it entails. We will not be wasting time at all. We'll be talking about what pips are, what lot sizes are. The reason for this is because we want to pick out some important parts of some of the trainings you've gone over, some of the trainings you've come across. We want to pick out some important parts so that we make sure that we're touching everything, right? And when we looked at it, when we came up with pips and lots, I would say that this is one of the most important, especially when it comes to risk management. You understand? We feel that if you understand pips, if you understand lot sizes, you can make better decisions on how to handle your accounts, what accounts to what kind of trade you want to place. We also want to give you information about how profitable certain instruments are relating to the other. Okay, how profitable certain instruments are relating to the other. That's what we also want to talk about. So we are hoping that at the end of today, you could now decide, oh, these are the kind of instruments I want to trade. Considering the risk to the reward of this particular instrument, this is the one I want to look out for. This is the kind of, oh, okay. Thank you. Wonderful. Okay. Who else? I think I've muted everybody. Who's on mute? Who's unmuted, please? Please. And make sure you stay safe out there. Whoever had that, they say, I hope you are safe, please. As I was saying, you would also, after today's training, you'll be able to make decisions. Oh, this is the kind of instrument I want to trade. This is what I want to do. You don't know that. So let's jump right into it. Within the next 30 minutes, I believe that we'll be done with this session. Okay. So now when we talk about let's start, first of all, let's start with lot sizes. Let's talk about lot sizes. So when you talk about lot sizes, when you talk of lot size, you're talking about the volume of trade. Okay, the volume of trade. Whenever you're trading, let's leave financial trading out of it for a moment, just a moment. Let's see what trading normally is. Exchange, right? Trading is exchange. If I'm trading with you, I'm exchanging. When you go to the market and what you go to do there is to trade. You exchange, even if you're the buyer, you're exchanging your money, you're exchanging your cash, right, with the goods. That's what you're doing. You're getting a bag of rice, you're giving them cash. Okay, so in a way, there are certain things or certain goods you will be told. You'll be told their amount. I decide not to buy them. The reason why you're likely deciding not to buy them is because you've compared the cost to what you see as the reward, right? Oh, Oh, how much is it? 15,000 naira. Oh, you compare 15,000 naira to what satisfaction you think you will get from it. And you agree with yourself that, oh, the satisfaction I'm going to get from this money is not enough. It's not up to this 15,000 I'm spending. That's when you now say, oh, it's too expensive, right? That's it. That's trading. It's exchange. But whatever it is we're exchanging, there are different volumes for which we exchange these things, right? Some people will go to the market and buy 4 bags of rice. Some people go to the market and buy half bag of rice. Of course, 4 bags of rice is going to be more expensive than a half bag, right? That's the idea. That's what trading is all about, and that's what lot size is all about. It's talking about the size of trade, the units of the of amount that you are trading. Okay, that's lot size. It's just like two people go to a stream, for instance, to fetch water. One person goes with a gallon, goes with, gallon. Another person goes with a small cup. So what does that mean? Both of them will be getting different amounts of water from that stream. Okay, so that's what it means. That's just lot size. How much, what is the quantity that you want to trade? The quantity you want to trade, number one, will determine, okay, how much of your balance is going into that trade. The quantity you want to trade will determine how much you'll be making or losing on that trade. You understand? So that person, those two people who go to the stream to fetch water, one person goes with a gallon. Okay, the other person goes with a cup. Of course, the person who goes with a gallon has access to more water, can fetch more water than the person who goes with a cup. But that also means the person who goes with a gallon needs more strength, needs more energy than the person who goes with a cup, right? So let that sink in. That's what lot size is volume of trade. Okay, so it's volume of trade. So it's basically the amount of currency units. So what I decided to do is I decided to show us what it entails, especially when it comes to trading, because we have basically 4 types. We have basically 3 types, but we have 4 general types of lots. Okay, when we talk about lots, we have the standard lots, we have the mini lots, we have the micro lots, then we have nano lots. Okay, so we have standard lots, we have mini lots, we have micro lots, we have nano lots. Now, when lot sizes was first of all determined, it was determined for currencies. It was determined for currencies. But over time, trading began to go beyond currencies. And that's why now we have commodities, we have indices, we have stocks, we have crypto, we have synthetic indices, we have all of them. But generally, when the concept was brought up, it was brought up to calculate the unit of currencies that you're trading at a particular time. That is why we have something like standard lot, which is the first type. A standard lot. When we say I am trading a standard lot, okay, when I say I'm trading a standard lot, what it means is that I am trading 100,000 units of the base currency. What it means is I'm trading 100,000 units of the base currency. That's what it's about. That's a standard lot. Now, what does that mean? It means that if, for instance, I go to the money exchangers, I say I want to buy dollar, and they ask me how much dollar do I want to buy, I tell them I want to buy $100,000. That is the same thing as placing a trade of one standard lot on my MT4, MT5, whatever the case may be. Okay, so when we talk about a standard lot, it is 100,000. So for instance, if you go to Euro USD, you go to Euro USD on your platform and you place one standard lot of trade. You want to place a buy and they ask you what is the volume. You select 1.0, one standard lot. What that means is that you are trading 100,000 units of the euro against the dollar. Okay, so if I go to Euro USD and I'm placing a trade on Euro USD, I place one standard lot. Let's say I'm buying Euro USD, one standard lot. What that means is that I am buying 100,000 euros against the dollar. You understand? So if the euro gains strength, I make profits that accrues to one standard. And that's why if you're trading one standard lot with currencies, especially when we talk about this, we're talking about mostly dollar pairs. Okay, mostly dollar pairs. If you're trading one standard lot, you're looking at making around $10 per pip. $10 per pip. And that's why pip is also something we're going to talk about. $10 per pip. Once price moves, every pip from where you enter the market, whether in your favor or against you, once price moves every pip, that automatically means that you're making or losing $10 for every pip because you're trading with a standard lot. Okay, so we have a mini lot, which is a tenth of a standard lot. Mini lot is, now when I say a standard lot, on your lot size, where you're placing your trade, it starts from 1.0. So from 1.0 upward is standard lot. 1.0, 2.0, 1.5, 3.5, 3.2, all those are standard lots. So standard lot starts from 1.0. Why a mini lot starts from 0.1. So from 0.1 to 0.9, from 0.1 to 0.9, 0.99, or whatever the case may be, is still mini lots. Is mini lot. And for mini lot, it means that you're going to be making around $1 per pip. $1 per pip. What does that mean? It means if I'm going to be trading a standard lot, I most likely will have more volume. And there's an account that can trade a standard lot. The balance of that account or the equity of that account will be more than that of an account that can trade a mini lot. You understand? So 0.1 giving you $1 per pip. And then we have the list, which is the micro lot. Micro lot is 0.01, which gives you $10 per pip. What does that mean? So if I'm trading micro lot from 0.01 to 0.09, from 0.01 to 0.09 is a micro lot. And for that, I am making 10 cents per pip. From 0.1 to 0.99 is a micro lot. From 0.1 to 0.99 is a micro lot. I believe that my sound is clear. Someone just reached me saying he has audio issues. I'm sure that is his Zoom audio. Please check your Zoom audio. You know, the funny thing is that I could attempt to explain to that person, but he's not hearing me, so I just reply him. Okay, good. So I was saying a micro lot 0.01 to 0.09 with a profit potential of $10 per pip. Sorry, 10 cents per pip. Okay, a mini lot is from 0.1 to 0.9, 0.99. The profit potential, a profit or loss movement, price movement of $1 per pip. $1 per pip. Why a standard lot is from 1.0 upwards. In rally trade, you can go as high as 50 lots. There's some places where you can do 100 lots. That is $10. So that means that if somebody places one standard lot on a currency, especially a dollar pair, you're looking at trading $10 per pip. If another person is using 5 standard lots, that means such a person is making 5 times 10, which is $50 per pip. You get? So that's how it works. That is lot size. But I went ahead to try and show us the profitability potential when it comes to lot size of some other assets, beyond this. So I have a table for the indices and for commodities. Now for indices are combined stocks, combined stocks that are traded as one. Now you notice that when we check currency, the highest for one standard lot is $10 per pip. But for something like DE40, one standard lot, and this is DE40 here, my first column, my first row. right? One standard lot is around $27.35 per pip. A standard lot is around $27 per pip. So that means that indices, or naturally DE40 is more profitable than currencies. But that also means that DE40 would also need a higher account balance to trade than currencies. Let me state that now. You know, it will need a higher balance to trade than currencies. Okay, because I think the margin, for instance, the margin for trading currencies is a standard lot. I think if you're trading currencies, you're trading a standard lot, your margin, you could do such with maybe around 300,000 naira or thereabout, thereabout. But when it comes to DE40 or some of these indices, in fact, you will not be advised to try it if you don't have up to 1,000,000 naira. And that is even, even 1,000,000 naira self will still tell you that please, it's too risky. So that's just that's the yin and yang of the whole thing. This one gives more profit, but it also needs you to have more capital. This one gives less profit. It also does not require as much capital. For US30, a standard lot is giving you around $5 per pip. $5 per pip. For US 100, a standard lot is giving you around $20 per pip. For US 500, a standard lot is giving you around $50 per pip. For US 2000, a standard lot is giving you around $200 per pip. Okay, $200 per pip. Also, these things depend on how their pip is calculated. That's why the next thing we'll talk about is pips. Okay, so we have, this is just how indices. So indices is a lot more profitable aggregately than currencies, but you also need a lot more volume to be safe to trade indices, right? Now, when it comes to commodities, for gold, a standard lot on gold is around $100 per pip. For silver, which is actually crazy, for silver, a standard lot is around $5,000 per pip. This is actually like the biggest that I have seen. Okay, but that also means that, with silver, what that means is, this is about risk and reward. Okay, this is about risk and reward. What will reward you very well could also have potential to have a high risk. You understand? So you need to be careful. As much as want to be excited, I am actually excited about the fact that silver is giving around $5,000 per pip on a standard lot. But that also means that the margin requirement for trading silver, do you understand? The margin requirement for trading silver is also very high. Okay, so somebody, and it's nothing if I decide that, trading silver, I could actually make such a profit, then it means that I should be considering very good funds to trade silver. But some of the issue with some of those instruments like that, like silver, for instance, it's kind of oh wow, okay. Francis asks, does this mean that silver is more worthy than gold? Now let's talk about that. Now, if it's from what we have seen now, in terms of profitability, right, per pip, when we talk of a standard lot, silver is more profitable. But that's not the only thing we consider when we're trading in this market, right? That's not the only thing we consider. Now, the truth is that we also consider liquidity, volatility. And the truth is that silver does not move as massively. It does not move as fast and easily like gold. Do you understand? So yes, the pip value on silver is $5,000, and the pip value on gold is $100. But the truth is that it might be faster for gold to hit 2 pips, 3 pips before silver even makes that move. I don't know if you understand what I'm saying. So that's the whole idea. That is how it works. Okay, so Yes, silver is more profitable than gold, pip for pip. But the truth is that within a very short time, gold is a kind of instrument that within a very short time is faster in its movement than silver. You understand? So the point is, and most times as people trade, they always prefer an instrument that moves fast. That's the whole idea. It's about preference. Once you understand the market, okay, once you understand the market, you now decide what you want to do. You decide what you want to do. Yes, sir. Now for silver, I think if you're trading a standard lot for silver, I think that if you are on a normal leverage of 1 to 500, for instance, a standard lot for silver is around 800 and something dollars. 800 and something dollars. That is around 1 point, that's over a million, definitely. Around 1.2, 1.3 million. Okay, so to place a standard lot on silver, you actually need around 1.2 or 1.3 million to place a standard lot, and consider a profit of around $5,000 per pip. Okay, but if it is gold, for instance, if you're looking at the margin for gold, to place a standard lot on gold, you may likely need around $400 to $500. May actually need around $400 to $500, which is around like say 800K, 750K. You understand? So it's cheaper. The margin of gold is cheaper. Okay. The margin for silver is higher, but of course, that is why the profit potential is also different. You get my point now? So that is how it works. Okay, that's how it works, and that's why we're holding this training, so that you can now make your decision. I personally have clients who decide that they want to trade. They are markets we call markets for the big boys. You understand? Here, gold is there also. Look at this instrument. Most times when people want to there's something we call flipping accounts. When people want to flip their accounts, that means that they want to make very huge profits within a very short time. Okay, these are some of the instruments that people trade, but it's about the risk, especially when you're using a small equity, is very high. So if you're trading instruments like this, it's not hundreds of thousands, we're talking about millions to trade them. So I have a very small pool of I'm being modest if I say small pool. I have some persons, Nigerians also, who I actually mentor, on trading some of these instruments, and they're doing well. So what we do is, trading instruments like this, we don't need to stay too long in the market. We just target very few pips and we are done in the market. So yes, they may not trade a standard. Remember that it does not mean that everybody has to trade with a standard lot. If this instrument is taking about $800 for a standard, that means 0.1 is around, for instance, silver, we said silver is around $800 for a standard lot. That means if I'm doing 0.1 lot, that's around 80 something dollars. You understand? And that is a profit of around $500 per pip. Okay, $500 per pip. If I'm doing gold, for instance, I don't need to trade one standard lot. Okay, even if I have a million naira, I can play on gold with 0.1. I have clients like that who, I have a closed door mentorship with them, and that's what they're doing. As it stands today like this, we already did, before this session, we already sent guys to buy gold. And it was just a short move, but there was nobody there that did not make around 200,000 naira per trade. You understand? So that's how it works. But yes, there are these instruments, lot sizes and all that. It differentiates profit potential. You understand? Now, what is the balance? The balance is that I should not have a 500,000 naira account and want to now trade or envy or copy somebody who is trading with a 5 million naira account. Now, if you can fund your account with 5 million naira or whatever like that, we have mentorship, this thing, you can be linked with me, we can trade, we can make at least 1 to 5% daily. Can actually do that. But now somebody who does not have something like that, who has 500,000 naira, it does not mean that your 500,000 naira cannot do something substantial for you. You understand? So we're not holding this training to try and push everybody to do so, but we are saying for every class of balance, for every class of fund that you can actually take advantage of this market. You understand? We also have agro commodity. We have coffee. Coffee is giving $2,000 per pip on a standard lot. Cocoa is giving $10 per pip on a standard lot. Corn is giving $500 per pip on a standard lot. Sugar is giving $1,120 per pip on a standard lot. Just to let you know that there are instruments out there with different profit potential depending on what you know. Now, what will make me, I'm trying to simplify, what will make me say I want to choose silver, for example, or what are the things I need to consider for me to say I want to trade gold as against maybe currency? What are the things? Number one is how much do I know about the market? Number one is knowledge. Number one is what? Is knowledge. Number two, this instrument I want to trade, how much do I know about it? What are the fundamentals I know that affect this market? What are the fundamentals I know that affect this market? Can I easily point it out? It's easier to be able to tell the things that affect the dollar, the things that affect the euro, than to find those things that affect cocoa, those things that affect silver, those things. Do you understand me? So what are those things that affect the market? Are there information I can easily have? Do you understand? Number three, what is my trading volume? What is my trading volume? Now, the first two I talked about is knowledge, because knowledge of trading and knowledge of the instrument is knowledge. For that one, at least a mentor can help you with that, right? For instance, I told you I have a closed session from every now and then. I have clients who approach me or they want to be part of that closed session. I give them and and all that. So I have that. If there is anybody here who is interested, that you can reach out to me. I have that. But a mentor can do that. But the third one, which is the volume, is very important. Okay, because you trade your account according to what the strength of that account. This business is a business for you to the people that enjoy the business are people that are consistent, people that move slowly and steadily. You understand? So if I have a 5 million naira account, for example, which once again, ladies and gentlemen, a 5 million account is just around $3,000. It's not even up to $5,000 against it. But if I have a 5 million naira account, for example, I can consider making around 50 to 250,000 naira daily. And that will be convenient. I can conveniently make that. Conveniently. If I'm doing that within a month, I've done now. As I get better, as I get stronger, I will now be able to even do more. You understand? But that's a 5 million naira account. Now, if I have a 500,000 naira account, I should not be considering making 150,000 to 500,000 daily. No, I have a 500,000 naira account. This time around, I should be considering, at least I'm just starting also. Okay, let me see how I can make, this is a 500,000 naira account. Let me say I can make from 5,000 to 25,000 or 20,000 every day. Somehow, from that my 500,000 naira, I know that at the end of every week, I will be able to withdraw 100,000. That is fine. You are working at the pace of your balance. You understand? Hey, so that is how lot sizes work. Okay, that's how lot sizes work. But the truth is that, whether I like it or not, there is something for everyone. If you are a high net worth individual, you have some. Yes, if you are okay, no problem. If you are a high net worth individual, for instance, you have good funds, you need a plan for it, that's fine. You understand? But if not, with what you also have, I don't want at the end of this when you say they just told us that it's only people that have big money that can trade. You understand? I just know that and I'll just digress a little bit here because of how terribly the naira is failing. because I advise firms, I consult. Now, because of how terribly the Naira is failing, I always say that there are two things the Naira is only good for now. There are two things that the Naira is only good for now. Number one is borrowing. The Naira is good for taking loan now. The Naira is good for taking loan now. Because right now we believe that once inflation is increasing like this, most times it is the people who, how they say, is the borrowers lose. The lenders lose. Hey, the Naira right now, the rate that the Naira is falling, do you know that let's say you gave somebody 500,000 Naira 2 months ago. You gave the person 500,000 Naira. Do you know that 500,000 Naira you gave the person, you personally that gave the person, as long as the person is paying you back 500,000 Naira later, you are the one who is losing, because the value of that 500,000 Naira is falling. In fact, there was a time when somebody was saying, and some years back, like in last year, so that man was saying, if you know what's going to happen in Nigeria, the rate at which the Naira is going to be weak, I will advise you to take loan from your bank apps and buy foodstuff with it. Do you understand? So the strength of the Naira right now is at the point whereby it's good for collecting loan and is only good for investment. The Naira right now is not good for saving. I'm telling you, Naira is not good for saving. The Naira is good for investment. Anybody who has very good funds in his account, just sitting down, and you think that putting it in your bank makes you safe, if you sit down and look at it, you're actually losing. You understand? Because for directly or indirectly, I've had to consult for some of those banks in the past, and I know what good use they are putting your funds to. You understand? So that's it. But let's move on from there. Let's talk about pips. Talked about lots. Let's talk about pips. So when we talk about PIP, right? This is PIP, so it means percentage in point. It can be measured in terms of the quote or the base currency. So you know how we calculate distance with maybe kilometer, we calculate weight with kilogram, we calculate height, with centimeter and all that, whatever the case is. That is also how we calculate change of price. We calculate it using PIP. We calculate change of price using PIP. So when because price is measured in numerical form, right? Price is measured in numerical form. If you look at this picture here, we have Euro/USD is equal to 1.13243. Euro/USD is equal to 1.13243. Okay. Now, what does this mean? First of all, what does this mean? This means that 1 euro. I'm trying to explain to you what this means. Euro/US equal to 1.13243. What does that mean? It means 1 euro is equal to $1.13243. You see that price you are seeing there? That price is for the dollar. Okay, because when it comes to currency pair, we have two pairs there. The first one you can see there is euro. The second one you can see there is dollar, right? The first one that is euro is one we call the base currency. The second one that is dollar is one we call the quote currency, right? The first one is euro, we call it the base currency. The second one is dollar, we call it the quote currency, right? Now, what does that mean? It means the euro is telling you that 1.13243 is how many dollars you need to get 1 euro. How many dollars you need to get 1 euro. That's what it means. The same way, if we're talking about Naira and dollar now, because Naira and dollar is normally written as USD/NGN. USD/NGN. So if I want to tell you, I would say USD/NGN is equal to 1,600. What does that mean? I'm telling you that $1, you get $1, okay, by giving me 1,600 Naira. So the more that 1,000, if it increases from 1,600 to 1,700, that means to still get that $1, you now need 1,700 as against the former 1,600. You understand? So that means you are needing more naira to still get the same $1. And what that automatically means is that the dollar is gaining strength. The dollar is getting stronger than the naira. That is also how Euro USD is working here. So if this price, this 1.13243 you're seeing, this 1.13243 you're seeing, if it continues to increase, if it continues to get higher, that means that euro is getting stronger. But if this number starts to drop, if this number starts to go down, that means euro is getting weaker. That is how it works. Okay. But the way we calculate the change of price is with the calculation of pips. Okay. Now, how do we do it? Naturally, the same way with LOT, pip was designed for currencies, first of all, designed for currency. Now, that we have, when you check your currency, especially dollar pairs, Euro USD, AUD USD, GBP USD, when you check these pairs, they're usually 5 digits. 5 digits. That means you have 5 numbers after the decimal point. You have 5 numbers after the decimal point. Now, these numbers, you will see from the image I'm showing you on the screen that each of these numbers has a role to play. The first one here is 0.1 pip. Now, what does that mean? That first number from not from your left, or the first number from your right. The first number from your right, or let me say the last number. The last number here is 3. That number represents points. That is 3 points. 3 points. So that thing can increase from 3 points to 4 points, to 5 points, to 6 points, to 7 points, to 8 points, to 9 points. Immediately it wants to enter 10 points. It becomes 0. My 4, which is the next number, turns to 5. That is why the 3, the last digit there, is referred to as the point. The next one is referred to as pip. That is why when we are adding pip or subtracting, when we are calculating pips normally, we usually ignore the last digit because it stands for points. We ignore the last digit because it stands for points, and we automatically begin with the first digit, 4. You understand? So 0. That's 3, increase to 4, to 5. Once it gets to 9 and it increases, it is what? The 4 turns to 5. You understand? So what I'm trying to say is that a pip movement occurs once the 4th decimal number moves by 1. So these numbers here, you can see there are 5 numbers after the decimal point. 1, 2, 3, 4, 5. There are 5 decimal after the decimal. So this is the first decimal number. This is the second decimal place, the third decimal place, the fourth decimal place, the fifth decimal place. So mainly the fourth one moves by 1. That is what? That is a pip. You understand? Judith, beautiful question. We are going there. We're going there. So that is it. That is how pip is usually calculated. So when we are calculating pip, we usually start from the 4th. We ignore the last one. Why do we ignore the last one? Because if I am adding, let me see how. Okay, very good. So let me do something. I'll do a little bit of calculation, so that we can get the gist, let me share my screen. We'll go to my chart now, right? Go to my chart so that I can show you guys a little bit of calculation. So yes, because the question Judith asked is very important. And that is why if you don't know how to calculate pips, you're going to struggle when you want to set your take profit. You're going to struggle when you want to set your stop loss. You understand? Because you're going to wonder, oh, where do I add it? How do I get this? There's going to be a lot of struggle. So I'm trying to switch to my, very good. Just, okay, almost there. Just 1 minute. Okay, good. So, so this is, for instance, Euro USD. Most of the dollar pairs. You know, most of the dollar pairs are 5-digit numbers, right? So I say that I have 1 point, right? 1, 3, 2. Wow, what a 3. So this is how it works, right? I have 5 digits normally, right? Remember that you see this one, this last digit, this 4 that you see here. This 4 is points, right? So if they tell me to add 1 pip, they say, oh, add 1 pip to this number. I'm not going to start here because I'm talking about pip. I'm going to start where? I'm going to add my 1 here. Now, remember, we also say that 1 pip is the same thing as 10 points. 1 pip is the same as 10 points. What does that mean? It means if I add my 1 here, I can decide to add 0 under this 4. Do you understand? I can decide to add 0 under this 4. So that is why if they tell me to add 1 pip, is that I add it here or I add 10. You understand? It's just like that. See that is add this or I add 10. Now, if they tell me, for instance, to add 10 pips, remember that first of all, I'm ignoring this place, right? I'm ignoring it. So my 10 pips will be where? My 10 pips will be like this: 1 and what? And 0. Can you see it? That's how my 10 pips will be: 1 and 0. Or another thing is for me to just add another 0 here. So that is why 10 pips is the same thing as 100 points. 1 pip is the same thing as 10 points. Do you understand? 10 pips is the same thing as 100 points. So that is how we do our calculation. So if somebody says, oh, add pip, you have to ignore that first digit, this point here. You understand? That is how you calculate this. Now, sometimes you're asked to calculate, there are some instruments that don't carry 5 digits. Okay, there are some instruments that don't carry 5 digits. Some of those instruments carry 3 digits, like somebody just mentioned. So of those instruments carry 3 digits. So let me show us an example of that. An example of that, like you talked, is JPY pairs. JPY pairs. So let's say we're working with Euro JPY, for example. Let's say we're working with Euro JPY. This is Euro JPY, guys. Now, let's get a clear chart. If you look at my right side here, if you look at this place here, the right side of the chart, you see that Euro JPY is not 5-digit number, it's 3. So that means JPY pairs are usually in 3s. Let's see. Let's say in JPY pairs, now what we have is 1, price will be like this. It will be like 159 point, right? 159.850. So what you've noticed here is that we have about 3 numbers after the decimal point. Remember that when I was talking about Euro USD and all that, it was 5. But for JPY pairs, it is 3. So how do we calculate pips in this case? We still recognize the last. In fact, so that it doesn't even confuse anybody, I'm not going to use 0 for this point here. I'm going to use another number. So let's say this is 7. So our price here is what? 159.857, right? Very good. Now, from this place like this, as we are looking at it, this, let's say this is how JPY pairs are looking. Anytime, if you look Euro JPY, USD JPY, GBP JPY, they're usually 3 digits. Any pair that is associated with JPY carries 3 digits, right? Now, this 7 here, we still regard it as points. So even if I'm adding 1 pip to this, I will still ignore that 7 and add it here. And I'll put 0 like this. That is how you add pips. If they say, oh, instead, I want us to add 27 pips to this. Oh, add 27 pips to this. What do I do? 27 pips. Remember, I'm not putting anything here. So 27 pips is going to be like this. 270 if I want, because 27 pips is 270 points. You understand? If they said, oh, we want you to add from 159.857, from this price here, we want you to add or subtract, whatever the case may be, 300 pips. They say 300 pips. Remember, it is 300 pips. So 300 pips. My 300 will not include this 7. So this is how I write 300. 3 will be under my 9. 0 will be under my 8. The other 0 will be under my 5. This is 300 pips. Yes, there's a decimal point here. But you don't calculate it the way you do it in your normal math class. This is 300 what? Pips. I am still ignoring this what? This 7 here. You understand? Oh, Judith has gotten it already. So that is how we calculate pips. We will still ignore the last digit when we are calculating pips. The last digit is for points. So let's do this now. Within the next 2 minutes, I'm going to write a price. Okay, I'm going to write a price. I'm going to write 2 prices. I'm going to write 2 prices, and then I will tell us to add so pips. Will give us my answer on that place. That will let me know that I can move on. So the first one is 159.725. Okay, the first price is 159.725. Then the second price is 1.0472. So guys, we have 2 prices here. The first one is 159.725. The second one is 1.04732. I want us in these 2 cases to add 270 pips. Oh yeah, give me your answer. You're adding 270 pips to these 2 prices. Give me your answer. You're adding 270 pips to 159.725. You're also adding 270 pips to 1.04732. Yeah, put your answer. Don't be, just put the answer. Put it on the comments. Let's see if we understand. I believe we are solving the math now. Like everybody's writing. Somebody has gone to take his pen. Why some people are like, oh, I'll just wait for people to drop their house. No, that's fine. I do it too, you know. I thought that's dropped their own Jari. I don't have this power. Oh. We are adding 270 pips. 270. 270. That's what we are adding. 270. Okay, answer has more. Answer has plenty. Let's go. Okay, so you know the way it is in class. I'll now do the classwork. I'll now do the what's it called? The classwork. So 270 for this one. You remember that we're adding 270 pips. So we're ignoring this 5, right? We're ignoring this 5. Our 270 is going to be under 2 will be under 9, 7 will be under this, 0 will be under this. For this one, we're adding 270 pips. So our 2 will be like this because we're ignoring the last 2. Right? We're ignoring the last 2. So 270 pips will be like this. So our answers will now be, for this one, our answer will be 162.425. Yes, 162.425. Why for this other one, our answer will now be 1.07432. 1.07432. So this is it. Yeah. Wait. Let me do the calculation. Let me put the final answer. Let all of us do remember how we do it in class. They used to do it in class that time where they would say for 1 plus 1. So all of us do it. 5 plus 0, 5. 2 plus 0, 2. 7 plus 7, 14. Write down 4, carry 1. Hey, so I'll put my decimal point, Abby. 9 plus 2, 11, plus the one that you carried, 12. You write down 2, you carry 1. 1 plus 5 is what? 6. Then we bring down 1. So our final answer here is 162.425. If you got it, congratulations. This one here, the answer will be 2. 3 plus 0, 3. 7 plus 7, 14. What will I do? I write down 4, carry 1. If I carry down 1, I'll carry it to 5, right? I'll carry it to 5. So if I carry it to 5, sorry, 7 was 14. I carry that one, bring here. 4 plus 2, 6 plus 1. That's what? That's 7. I put down my 0. 1 point. So this is the final answer. So Woma was correct. Ikedi, your first answer was not correct. Alabode Ishedu, your first answer was correct. Your second answer was not correct. You put 7433 instead of 7432. Emmanuel, okay, yes. Emmanuel was correct. Sunday Joshua, correct. Francis, correct. I hope correct. Damn, oh boy. Oma don't run change. You don't run change answer. Oh, wow. Okay, no. He didn't change his answer. This was correct. Okay, yes. So we all understand calculation of pips. That's how it works. Now, I must also say that when it now comes to, for calculation of pips when you're talking about currencies is also different when you're calculating pips for indices and for commodities. Remember I said pips was calculated, the pips itself, pips, 10 point equal to 1 pip and all that, was designed specifically for, what will I say now? Was designed for currencies, okay? Calculation of pips was designed for currencies, okay? But when it comes to indices, commodities and all that, it's not, that's not, calculation of pips and all that is not done that way. You understand? So when it comes to calculation of pips for gold, for this, we normally just tell people, most times when you're calculating that way, it's more of, you're doing okay. So when you're calculating pips for gold, for instance, if you're calculating pips for gold, if price moves per dollar that price moves is 10 pips. Guys, for gold, if you're calculating for gold, per dollar that price moves is what? Is 10 pips. If price moves per dollar, that means this is gold chart, for instance. If price moves from 2,400 to 2,401, that $1 change, is equal to 10 pips. Look at it. If price moves from for instance, right now, price of gold right now is 2,413. It keeps changing, but let's just say price of gold right now is 2,41357. This is the price of gold right now. Now, if price is moving 1 pip, the price is moving 1 pip, we also still ignore this point and say this is 1 pip. So if price moves from 2,413 to 2,414, that is already 10 pips. Okay. In this case here, if we say add 1 pip to this, we are also adding that one. Oh, sorry. We're adding that one to this place. Okay. We're adding that one to this place, just like a hand, just like it works. So, because you see the way gold is kind of different from the way currencies are, and the way currencies, both JPY pairs and dollar pairs, here. But what you should just know is that if price changes by $1, that is 10 pips. If price changes by $1, that is what, 10 pips. So the validation is usually different and all that. Don't want to go too complex into the whole thing, but that is how it works. That's also how oil is. If oil moves from 50 to 51, that's 10 pips. You understand? That's 10 pips. So, for those persons requesting to record, I think don't worry about that. Like, this class was recorded from the beginning, so it's fine. You can get the recording. You understand? Because we are even almost done with the class, but it's fine. The class was recorded, so I'm sure that can be made available. Okay. Oh, okay. So there's even a YouTube, have a YouTube link where some of these things are, and my guy is already dropping it on the chat. So you guys can click subscribe on those YouTube links. You'll be hearing from us from time to time. Rally Trades YouTube also is there. So, you can't have too many YouTube links. You can register, click on the link that is being dropped. You get materials there, more explanation on these things. Rally Trade also, you go to YouTube, so you search for Rally Trade, subscribe to that one. Those are where you get information, right? So Ikedi, yes, you were correct. Ikedi, you were correct with your 2414.57, right? So that is how pips work. Now let's end with risk management. What to trade? Remember I said you are trading with instruments you are familiar with. You understand? You cannot just go into the market and just start to click on any instrument and trade. You need to be trading instrument you're familiar. What does that mean? It means that at least instrument you can easily get information about. Instrument that you can easily get information about. At least you can know when their fundamentals are coming out. Okay. So there's no fundamental. For instance, you will not easily just see fundamental on gold, but you know that most fundamentals that affect dollar also affect gold. You understand? Most fundamentals that affect dollar also affect US 100, US 30, the indices. You understand? So when you are trading like that, you need to make sure that you are trading on instruments you are familiar with. Now, you will need more margin to trade commodities than you will need to trade currencies. You will need more margin to trade commodities than you will need to trade currencies. So if your money is small, stick with currencies. I've made, for those who were not here, I've also made a call. Like I said, I have a pool of clients. I call them high net worth individuals who, at one point in time have some volumes, okay? Have some volumes, but they do not, maybe because of skill, because you've not learned so much or all that, they have those, they don't know what to do with those funds, okay? They don't know what to do with those funds. You can reach out to me. After this, I'm going to drop um my line so that you can reach out to me. We can show you how to do it. Some persons already have automated trading working for them. Me, I'm more of a trade yourself kind of person. I'm more of a trade yourself kind of person. And I feel that everybody can have the knowledge to just make at least 1 to 5% of their trading capital every day. You understand? So I have some persons who I mentor. Mentor is a big word. These people are my orgas who I kind of follow up. Okay. So if you're interested in such, you have good funds, you're interested in such, you need someone to hold your hand, do that. And this is your exclusive right as a reality client. It's your exclusive right. So it's not as if yeah, I'm going to state it here. It's not like once you make that 10% or make that 5%, you give me this is your exclusive right. Of course, some of those materials, some of those special training, if you so want, may not come free or cheap. But you can reach out to me. Why I'm just saying is because it's very important that you trade according to the size of your balance. Very important. You also have account officers, first of all, that will give you all this information. So if you are trading, you want to trade small, you stick with currencies. But if your account is huge, you want to make very good money within a short time, indices and commodities are for you. Okay. Now, you must also devise a strategy before you execute any trade. Okay, your trading time, your risk. I always advise that you don't risk more than 20% of your capital. What do I mean? I mean that if, for instance, somebody has a million naira, your total margin, You know, margin is the cost of every trade you place, what it costs for you to enter the trade, what you need to have to enter the trade. Hey, let me say it like that. Now, your margin, your total margin per time, all the running trades on your account at a particular time should not cover up more than 200K of that 1 million. So what does that mean? It means if I have 1 million, for instance, now, and I see that I want to enter a trade, that trade probably takes 100,000 naira of my margin. It means I should not have more than 2 of that trade at once. So your account should not take more than 20% of your capital into a trade at a time. Okay. Now, and that's why I also advise you don't have too many trades running at once. Okay. Now, your market structure, make sure you take into cognizance the structure, the zone of interest, and all that. We are going to be having a special training. Okay. Remember I said this training is actually for people who are maybe not professional traders, you know, newbies, but we're also going to be having another training where we will go deeper, you know, we'll go deeper into some of these things. We have some of our experts who will be taking some of these sessions. So just your account officers will get back to you with those information, you know, to learn about market structure, to learn about zone of interest and all that. But all these things are things that you need to be sure of before you enter into the market. Also, your risk to reward ratio. Okay, your risk to reward ratio. What does that mean? It means that your risk to reward ratio can be maybe 1 to 2 or 1 to 3. What does that mean? It means that if I'm risking this particular number of pips to make this particular number of pips. What does that mean? So if my stop loss is at around 10 pips, maybe I set a stop loss of around 10 pips or a stop loss of around 20 pips, I should be targeting to make 40 pips, which is times 2 of what I am risking. You understand? Times 2 of what I'm risking means my stop loss is around, this trade I want to take now, I can only bear to lose 20,000 naira on this trade. Then it means that my trade should be in such a way that I should be looking to make like 40,000 naira from that trade, or at least 20,000 naira from that trade. Okay, it is very bad that you're trying to make 5,000 naira from a trade and you are risking 20,000 naira from that trade. I may not advise that. You understand? But here, that is how it works. Okay, but yes, this class, we don't want to go too deep into this. We just wanted to make sure that everybody understands the concept of pips and lot size. Your lot size is the volume you are trading with. Your pip is referring to the profit. The pip is referring to the measurement of price change, how we measure the change in price. Okay, so for any additional, of course, you can reach out to your account officers if you have questions that were not answered here. But in the event that you need to you consider my offer and you want to get back to me on it, somebody already dropped his account number. I already have someone dropped his phone number. I have your phone number. I'll reach out to you. I'm going to drop my WhatsApp number. Now, just plead with us. It will be better if you just reach me on WhatsApp. You know, just drop your message on WhatsApp. I will do my best to respond as soon as possible. Okay. So sometimes I may be taking meetings like this, and so it may be hard for me to take calls or even reply messages, but as soon as I'm back on WhatsApp, I usually reply. Okay, so I'm dropping my phone number for those persons who are interested in you know, trading high volume. Okay, but you need skill, you need training, you need support, you need all that. Reach out to me. Let us form a mentorship schedule so that I can see how I put you through depending on your individual needs and all that. Okay. Thank you so much for your time. We will also be, how do you measure PIP using Android phone besides manual calculation? If you're using Android phone, then I think you should use manual calculation. You understand? Because it would have been, it's easier to use it's easier to use. If I'm using my system, for instance, if I'm using my system, I can easily just use my crosshair to tell the number of pips, right? I'm sure that's what he's asking about. He knows that if he's using his system, for example, if I'm using my system, I can easily just tell how many pips this is from here to here. The middle value there is what is giving me pip. For this case here, I am taking this thing from 2412. I'm taking it to 2400. Okay, that is what from 2412 to 2400 is close, is around 120 something pips. Is around 120 something pips. So that value in the middle is point. I just divide it by 10. But on phone, especially with the Android phone, it's quite difficult to do that. You may need to do that manual calculation. I think there is a provision MT5 mix. Let me confirm. There's a provision MT5 mix. Let me see. So, but for MT4, there's really nothing you can do with your crosshair, just like I can do with my MT4 on my system. So the best way to calculate pips would be to use that manual calculation. You understand? But on so on MT5, if it's MT5, you can easily do it. For those who are using MT5 on their phone, you can easily do it. Once you put your crosshair on your chart, once you put your crosshair on your chart, you have put your crosshair on your chart. You will use from the place you want to drag this thing down, drag it down. You put another hand on your from the place you want to drag it down. You just put another thumb on your screen. You put another thumb on your screen and use. So you have your two thumbs on your screen now. You understand? One on your screen that is just there, and the other one can move to adjust your crosshair to tell you number of pips. But MT4 doesn't have that feature. It's MT5. You understand? MT5. Okay. Okay. So dropping my personal line. Dropping my personal line. You can reach me on WhatsApp. Okay. I got some messages. I will do my best. So those persons who have directly sent messages to me, okay, please also take my. I'll just plead with you. It's not pride. It's not pride. Please, I'm very sorry. I will just advise you take my number instead and just give me a hi on WhatsApp, so I'm sure that I did not miss anybody's number. You understand? I'm sure I did not miss anybody's number. Okay. So yes, reach out to me. I dropped my number already. It's my WhatsApp line. Reach out to me and let us see. But yeah, that's the much that we'll be taking. Thank you so much for your time. Look forward to hearing from you, your personal questions and all that. Thank you so much for your time. Bye for now.
All right, then. Thank you very much, Sam Banks. Ladies and gentlemen, thank you very much for joining in. It's been wonderful to have you here around. And remember to always trade cautiously. Remember, every analysis, trades and education that was been given these sessions solely on educational basis. Past profit do not guarantee future profits, and always remember to trade cautiously and apply proper risk management levels. All right. So also remember to subscribe to the YouTube channel. Subscribe, like, and share, and drop comments on the videos and any other thing you like us to put up for you. You can go there to learn new strategies, go there to learn more, to have more knowledge and some educational content concerning trading. All right. So yes, as you also mentioned, if you do need a mentor, somebody to guide you hand in hand, please feel free to reach out to him so you'll be able to get proper guidance. All right. So of course, as he mentioned, we'll be having this often and also having some more strategy classes. Always speak to your account manager and learn how to actually be part of them. And yes, most times this is also streaming on YouTube as well. You can always go to YouTube to also stream, like, and share. So thank you very much, ladies and gentlemen, for joining in. We'll also be having a New York live trading session that we do every Tuesdays at 1 p.m. So the next session we're going to be having is New York live trading session. All right, thank you very much. My name again is Valentine, also known as ValFX. Do have yourselves a lovely, profitable, and peaceful day ahead.